Hey everybody, how's it going? So we got Don, Philip, Larry, Rex, Sergio, Maurizio, Sergio, Maurizio, Dan, Svinborn, Devin, Rick, Roland, Tara, Ted, John, Wade, Nikki, George, Robert, Jaquise, Craig, David, Francois, Evelyn, Andreas, Cliff, Tara, Carlene, Ray, good morning, 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 Eric, Al, Rongamer, good to have you as always, Jan, Gary, Pat, Jessica, good morning, Keith, glad to have you. And if you want to chat with me, like all the fine people saying, hey, good morning, click the link over here on the translucent monster. It's actually a kind of a turquoise color. It's mango flavor. Pretty delicious. And if I lift it up, you can see it says mango right down there and in orange. It's like a, I don't know. It's the green screen, you know? If I turn the green screen off, it wrecks the illusion. Anyway, how's everybody doing? Good? Good, good. We have new cars piling up like crazy. And let's talk about it, shall we? Let's talk about it. And if I pop up the right link and not the wrong link. Come on now. Come on now. I thought I had it. And no, no, it crushed my hopes and dreams. Let's see. Here we go. Get the right one at the right time. So check this out right here. There we go. New car inventory has exploded higher. What does that mean? It means we're up 195% in the last 30 months. 195%. New vehicle average transaction prices growing at the same time. Hmm. Now we're actually seeing a little bit of easing, down 3.5% in January compared to a year ago. The average new car is selling for $47,000. Price has been trending downward for roughly 6 months as automakers sweetening deals to keep the sales flowing. Now, this all ties into the interest rate. The downward pressure mainly because new car inventory keeps climbing. Interesting here, right? Anyway, we're seeing February started the day with 80 days of new vehicle supply sitting on the lots. That's the highest level since June 2020. I mean, think about it. That's 80 days of depreciation. That's almost 3 months just sitting there. We'll see where we get to. This doesn't look like a banging deal here. So there you go. October 21, December 22, January 24. New car inventory sitting on the lots. If you want to go buy a new car, well, there's 2.61 million of them sitting on the lots out there waiting to be purchased. So that's it's all a side effect of the interest rates. I mean, it's hard to buy a new car, $50,000 if you don't. I mean, that gets tough, right? We're seeing the interest rates ticking up too, right there. Mortgage rates ticking up, but this DGS2 is the driver. Fed talking about holding rates, so rates are starting to pop back up, and we'll see. We'll see. F-150's pushing 100K. Cybertruck's pushing 100K. I mean, that's just the average price. The average price, $50,000 basically, if you round it off, round numbers. So, yeah, the prices of cars have gone up. The inflation, the interest rate. On top of that inflation of the price going up, I mean, it never ends for us, right? Never ends for us people that actually buy. Oop, that's not what I wanted. You can just search for things like, hey, I want to know what the 30-year fixed mortgage is. Right there. That looks a lot like the DGS2. 2. You may see this climb. 30-year fixed mortgage is 6.9%. 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 30-year fix Compare this. It was back in 01. We had interest rates sitting this high. And the last time we climbed like this, back before this thing even has data. So we were on a downward go. We went basically almost, essentially zero for mortgage rates, but climbing back up. And the historical on this thing, if you look at it, the historical average probably hanging out somewhere around 8.5%, 9%. So we're still below historical average on a 30-year mortgage. Anyway. Got to be careful out there. Wild stuff, right? Wild stuff. Anyway, Bitcoin ripping again. Imagine that. Now, I was talking about something in my update for the week. My crypto power plays update for the week. Think about this. The fund managers. Now, we're not talking hedge funds. We're talking about retirement fund. We're talking about people that manage large amounts of money. We're talking BlackRock with their $12 trillion assets under management. We're talking Fidelity. We're talking, all the retirement fund managers. Their narrative is like 1% exposure to Bitcoin. Think about that. If you have $12 trillion under management, and you're going to allocate 1%. We're just talking about BlackRock. BlackRock has $12 trillion on assets under management. They suppose they were to allocate 1% to Bitcoin as the narrative is going. Do the math. $120 billion. We'll look up IBIT, which is their weapon of choice right now. Roll down. Look at assets under management. $10 billion. Ooh. That could go up 12 times. Could. I'm not saying it will. Could. Could go up 12 times. What does that do to the price of Bitcoin if you suck that much money, that much supply out of the system? Leave that up to you. Anyway, we've got an interesting week coming up this week. Interesting week. Dun, 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 dun. We have Fed Chair Powell testifying. We have JOLTS jobs openings on Wednesday. We have Fed Chair Powell testifying again on Thursday. And we wrap up on Friday with the unemployment update for the month of January, I guess, or whatever. We'll see what they got. It's kind of interesting with the Powell testimony. They'll probably be grilling him. He's in front of the House and the Senate back to back. Otherwise, relatively benign here. We do have a big OPEX coming up next week. We've got the quarterly futures ending. We've got the quarterly options for S&P and all the things. So that'll be another big OPEX, and it's kind of hitting early because of the first Friday right there, third Friday of the month, coming in the 15th. So we'll be cruising on through. And we got the FOMC meeting coming up later in the month also. So not huge big news hitting, but this week. But it's interesting with that the testimony of Jerome Powell this week. So that could be interesting. And we'll get under control, my man. All right. Here's the earnings coming up this week. We have C this morning and GitLab this evening. And, SAIC, that's where, if anybody remembers, that's where my engineering company is a spinoff of. My family engineering company actually spun off of SAIC. We've got Tuesday, we got NEO and Target, CrowdStrike, ChargePoint, Ross the Boss. I'm sure that's going to be a big market mover right there. And then Foot Locker, JD.com, we got Kroger, Big Lots, Broadcom, Costco. It's been an interesting one right there, Costco. Marvell, that's the chips, not the superheroes, as in, semiconductor chips. And I mean, there's a lot of stuff hitting, but a lot of your smaller and mid cap stuff. Not so much the big name movers. We've already done most of those. Bitfarms coming in down there. Interesting. Bitcoin miner. And we'll see if any of these really push the market around. But before we jump into charts, we should completely, we've been completely out of order here today. So all trading involves a substantial risk of loss. Past performance, not necessarily indicative of future results. I may never get another one of these predictions right again. This presentation intended to be informational, educational, fun, and entertaining. It's not a recommendation to buy or sell anything. All right. No financial instruments, no stuff from gurus. Don't buy stuff from me unless you trust people. All right. Make sure that you understand what you're buying. Don't just fall for a slick sales presentation. All right. Speaking of which, I got one coming up at 11. So if you want to come hang out with me then, watch for the link in Discord. Don't buy stocks. Don't buy options. Don't buy Forex. Don't buy futures. Don't buy cryptos. Don't buy bonds. Don't buy treasuries. Don't long them. Don't short them. Don't trade them. It all has a substantial risk of loss. All right. If you desire personal financial advice, you got to hire and consult a financial advisor. It's not what I do. I don't give you advice. So be careful out there. All right. That's the bottom line. Nobody's watching out for your money like you. Even if you hire somebody, make sure you trust them. Because, it's like the financial advisor that my mom hired, got her into a Ponzi and lost half her inheritance from her parents. And you know who made that back for her? This guy. Anyway. All right, what we got moving today? What's happening? What's crapping? We pretty dang close hit the 150 target on that I was looking at on Friday. It actually happened in futures. We basically we hit the line right there. Now moving all my alerts. Awesome. I can't move the alerts when I try, but when I'm on the screen here, I can move them every time. Anyway, thank you, TradingView. Right there, came up. I think we were 50 cents off or something like that. Let's see. What was the high? 51, 49, 25 was the high. So 75 cents off 51.50. And, it moves in quarter point increments. So I was pretty darn close. If that was the top, watch out for a pullback. It may very well happen. We've been 86 days without a 2% pullback, 86 trading days. That's pretty wild. So that is pretty much the entirety of this giant move up without even a 2%, let alone a 3% pullback. So watch out for a larger pullback. And it could accelerate into something even bigger. So please be careful. Please, please. We're seeing this right here coming off of the high. This is stocks above the 50-day moving average. While we were making all-time highs in S&P, this is not. So we're seeing smaller and smaller number of participants in that all-time high. If you don't know, like NVIDIA, it's concentration kind of in the Mag 7, except the Mag 7 was concentrating down to like the AI 5, I guess, is what, people like Jim Cramer are calling it. Where you kind of saw this narrowing of participants in the new high, like NVIDIA. And newly added to the S&P, SMCI, this stops at a lower high. Watch out. That may be it. Just being listed on the S&P, and you're like, oh, it makes all these things have to buy it. Be careful, though. All these buyers bought in anticipation of that happening. Right here. It can be a sell the news event. Be careful, be careful, be careful. And these buyers may not have known they were buying it in anticipation of that, but may have just been like, momentum. There was not even hardly a pullback at all in that move. Be careful. Things don't just go up 700% without retracing very deeply. Just saying. Can we go higher? Sure. We have 1,200, 1,300, 1,500. It can happen. But be careful out there. They they can dilute this baby, and we can watch it rock down pretty hard. People are fickle, all right? I had a chart up here, right here. Remember, euphoria, initial lightning, complacency. Watch out. Could be on this, and then drop. The reason this is a chart, and it's like there's a million different versions of this thing. Just watch out, all right? This rally is real. Time to get fully invested. I mean, like talking about how undervalued NVIDIA and SMCI are. We're all going to be rich. Be careful. This is kind of the mindset around AI right now. When people, don't trade and they start talking, I mean, Goose has been talking about his flight attendants talking about SMCI and NVIDIA. They're not traders. They don't even, so that's usually the time when the trade's about done. Please be careful out there. Please, please, please. We may see this flash down. Just saying. Just saying. Dun, dun, dun. ES may get that lightning pullback. If we see a flush in ES, I bet we see a bigger flush in the outperformers like NVIDIA, SMCI, things like that. NQ tagged that level. Zoomer up, Buttercup. Right there, we essentially tagged it. Looks like the high 18,377. I was saying 18.4, which I was a little over the line because I was rounding off. We basically tagged the line right there too. So Russell is chugging here. We may break out to a new high. 2120 basically would be the upside resistance. We could go as high as 2150. I would watch out. This looks like a very choppy overlapping thing. Some kind of corrective price action. This is not bullish type price action. When this breaks, it's probably going to come down violently back down to this area, and it may start something bigger. We could see, and you're like, JT, how the fudge do you even trade RTY? It's IWM here. We may see a quick retrace down to this 180 to 190 area, 180 to 188 area. Get my numbers right. And then if we don't hold that as support, we could be talking somewhere down like 120, 130. 135. Could get pretty ugly pretty fast. I want everybody to be very careful. And we may see an initial breakdown here, a bounce, hold to 618, and then flush much bigger. So please be careful. Please, please. Oil maintain the breakout on Friday, and while we may get another flash down, I think we're probably setting up for the move right up here to between 83 and 86. And if we're going to be really bullish, we'll make it all the way to 90 and then probably retrace. So there's your targets, 83, 86, and 90. And I did flip long oil on Friday. For those of you in Discord, I put out the alert. The trade I took initially, gold, trying to break out. We can actually maintain this. This was the highest weekly, daily close that we've ever had on gold on Friday. Pushing out. There's more gold shorts than there's ever been right now. This could turn into a mega squeeze. Please be careful. Please, please. This gold was shorted like crazy on this pop right here. Thinking that we can't break out over 2100. It's like a market myth among fund managers that gold is not going to break above 2100. And if we start maintaining that, watch out. Nothing moves like commodities when they really start moving. All right. Be careful. I'm just saying, be careful. Bitcoin doing that break higher. All-time highs probably in the target here. Watch for a reaction up there, right around 69.9 or 69.8, whatever it was. Ching, 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 ching. 6,900 on this chart. 69.4. Yeah, so watch that Watch that reaction there as we approach that 69 area. We're probably going to go test it. May bust through 77 and upside target 85, 104. We could see that before having. It doesn't have to pull back. I speculated we might see a pullback before having. Looks like we're going to go full crazy move ahead of time. Ethereum has set itself up, retesting this resistance zone from that prior high right there in April 22. If we can break above that, we'll probably go retest the high at 4,900. If we break above that, probably go on extensions, 5,900, possibly 7,300 for Ethereum. Pretty wild. Money's flowing. And right now there's not the leverage. This move in crypto has not been as leveraged as we saw in the past. So even though Bitcoin's right back up here, we're actually seeing leverage levels like, I think it's 30% of what we were right over here. I think that's the number I saw. So we're seeing a very unleveraged Bitcoin play right now. Maybe it's on the back of those retirement accounts. I don't know. We'll see. But there's huge potential upside if this thing gets fully leveraged up like we saw back here. We're talking targets in 150, 300,000, maybe even higher. So dollar just keeps churning at the roadmap line. Stuck. If we break down below these lows right here from February or January, February, probably going down to the mid 90s. If we break up above this, probably going up to 109. I give it credence to going lower because we've kind of invalidated going higher right in here on the smaller time frames. So watch out. We may break down below 103 and head on down. You're like, how do you even play DXY? UUP is one way. Then other stuff like FXY, FXB, FXE. Those are other ways that you could play in the regular stock market without going to currencies. SMCI was the big popper, and it looks like we may push on out and make a new high. Be careful, though. Be careful. This is probably getting to be the last little squeak here before we rip. We've seen other things the day they get announced for listing, they pop, but then they drop big. So be careful. Dun, 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 dun. MSTR popping right up through the extension target. This is going full crazy. I have to say. We have to zoom out and look at the bigger picture. Probably gonna find some resistance right here at 1600. If you bought in at the 500 area, please protect your profits. That's over 100% gain just on shares. I booked out at 950. Hey, I'm pretty happy with what I did. It was like a 90% gain in just a few weeks. I mean, that's pretty dang good just on shares. So DECK, Deckers Outdoors, going on an extension. There's another chart going straight up. Can expect that's gonna come back down pretty violently at some point. We're already hitting the 929 extension, 959 above that before we may see another one of these pullbacks. AVGO, one of the AI5, continues to rocket higher, and where are we gonna give it up? It's going to be 1,500. It's going to be 2,200. I don't know. One of these days, it's going to come back. NVIDIA keeps climbing the fib ladder. And maybe heading right up to the 1,250 target up here, where it becomes the largest company in the world. That'd be pretty wild. Things can remain irrational. Like SMCI can remain irrational, going higher much longer than you can afford to stay short. So I'm just, the irrationality of the climb higher can keep going. It doesn't have to give it up. I'm just, that was one reason why I said when we get up in the zone, Buy $800 puts as far out as you can possibly do it. One of these days, it's going to come back pretty dang violently. I'm not talking about by March or May or, even June. We're talking like 2025, 2026. As far out as you can possibly go, it's going to give it up eventually. How do I know? Because we have lots of history of things going crazy and then coming back. Same kind of look and drop. You may be like, well, the prices aren't that crazy on this one. Well, it did a split in here too. So we actually have to do GME times 4. And now it starts looking a lot more like SMCI kind of craziness. Yeah. So be careful. Chasing it long, chasing it short. There was another one on the list I saw somewhere. We'll get to it, I'm sure. Now, is that getting crazy? Yeah, that one's getting crazy too. I mean, look. See, it did that same exponential up, right back down. We're going exponential up again. It can make a higher high, but it's probably going to come back down again. DECK. Yeah. So all these just being crazy. Even Lilly, look at that. GLP-1 drugs. If you see any news on people dying from GLP-1 drugs, this is going to plummet. But this could be a whole new category. That one in NVO, both rocking in the GLP-1 drug arena. And like I said, looked like NVO might go to the top of the channel. Watch for resistance right in this zone. If we break out of the channel, we may go to a new higher channel. Same for Lilly too. So we may rock it on up and test the top of the channel here before we get the bigger retrace. Coin is popping to 70 is the target. SOXX. Coin never gave me the re-entry. SOXX, keeping on climbing. When NVIDIA gives up, SOXX is going to plummet, and SOXL is going to plummet, and all those, SMH is probably going to plummet. All those derivative ETFs. AKRO, that's a biotech pharma. Be careful on this stuff. LABU, that's going to be 3. That's leverage on biotechs. Right now, the chart says we're probably going up to 220. I would be very, very cautious. That's not exactly 5 up. So it looks like a 3-wave move. We'll probably top out somewhere in this zone, 196 to 220. And then we may make a lower low after that sometime out here in a time far, far away. FUFU doesn't have enough chart to do anything with. Being ridiculous. AV. It's essentially a market roadmap bounce. We get above this gap zone here. Could be heading up to 149, possibly 156. SE, reporting earnings this morning. Looks like they, instead of losing money, they made money, but beating on the top, beating on the bottom. If you ever hear anybody saying that, that's earnings is the top number, revenue is the bottom number. You can see how that one's on top, that one's on the bottom. So they beat on both numbers. And losing money, net income. It's pretty rough when you keep losing money, keep losing money, keep losing money, keep losing money. We'll make up for in volume what we lose per share. I mean, they're growing revenue like crazy, but they're still losing money. That's not just long-term sustainable. So I don't know that I would chase that one at all. Danger. I like companies that make money. There's plenty of them out there. No reason to chase stuff that loses crap tons of money. TSM, right into the resistance zone. We get above that. We could be talking about a bigger move up. It's right at the prior highs. be like, what does that move look like? It looks like 168, 198 potential if we're going to break out. CRWD, CrowdStrike, getting a little bit of resistance here. Probably going to move on up to this 350 target. And that little pullback it did probably helped set it up at 350, 357. Yep. ARM. It's another one. Looks a lot like that Euphoria chart. I'm just saying, like, we keep holding that 618 level. That's a major resistance point. Hold under it. The odds are high. We're coming right back down to this area, right down here around 70. How long? It can fart around. I mean, this could take a while. I mean, this could be like this. It could be like this. All right? It could be October. It could be November. It could be next year. We can zoom this out even more. It could be like that. I mean, it could be out to 26. Eventually, we're probably coming down, but it's just the same chart pattern. I've seen it over and over and over. We do some sort of exponential pop, hit the 618 as resistance, and it can climb on up to 76 too. Be careful. DWAC, there's DWAC. Look, same pattern. Probably coming back down. It may go all the way back down. I don't care what kind of pop it's got on the way. And this, I mean, this doesn't have to go fast. It could take a while. Could grind it back down. And this one is notorious for doing this over and over and over. Did it over here, did it over here. Did it right there. This one's a little bigger. Be careful. Dash. So be careful with those momentum plays. I'm not a day trader chasing momentum plays. I found that I do much better when I don't have to sweat these things. I can just, get in at a break above the roadmap line and then ride it up to targets, then get out, book my profits. So Dash looks like it's getting a little crazy, may go up to 150. Got the resistance right there that we're trying to break through. It may take us on up to this double top area. And apparently I mistyped that. I don't even know what it was. Yeah. BRT. 89. Looks like we may pop it right on up. KB. Wow. Look at that chart. Lots of gaps. Maybe heading on up to 53, possibly 55. Extension above that. BitX. You want to get some leverage on Bitcoin. Just buy some shares of this baby. You can just hold those wherever it pops. If we get some of those crazy targets, I mean, you can do it on $50 a share right now. If you wanna get super crazy, play with nitroglycerin, while you're soaked in gasoline and matches. Go buy some options on this. 10x the leverage. So you'd be like 20x leverage on Bitcoin on a percent move basis. But I mean, shares is probably good enough. Instead of buying Bitcoin, you can buy shares. Remember, this has a high cost for the long duration. So when we make the move, book it out, you're paying almost a 2% expense ratio just to hold this thing. That 2%, it's not 2% a day, it's 2% a year, but it gets taken out daily. They take that 1.85% divided by 365. And every night when they rebalance the fund, they take their cut. Every night. SMH, probably gonna target that area right there that I've had on the chart for a long time. Right up in that zone around 235. BKCH. Target's right up there, 62. USD. I'm not telling you to buy BitX. I have a couple shares myself. Literally a couple shares, like 2. I don't have like a major chunk of it or anything like that. USD. Here's a Ultra Semiconductors. Probably gonna head on up to this 115 to 130 area. And we'll see what happens. That's getting, it's not as exponential as some of the others, but it's getting there. LNTH. This is a bearish pattern so far. We have lower highs from all the way back here. Got to get above that to go up. I feel like this will be a key point to watch for that 79. If we're going to actually flip this around positive, yeah, that zone right in there. Getting above that can be positive for LNTH. We could be talking like 114, possibly 132 on the upside, which is pretty good considering that's like a double from where we are. But you got to get above this resistance. If you buy now, you could be buying into something that drops to 46. Ugh, that'd be losing like 30%. No bueno. MVO, we already talked about. HSD, wow. Look at that pile of garbage. Got a reverse split. This is all the makings of a dumpster fire. On the pathway to zero. MU. Look at that baby popping right up into the resistance. Comes from right back here. These prior highs. We break above that zone. Right in there. We could be heading on up to 112, possibly 130. Not bad. Bad at all. You know, AI doesn't work without memory chips. That's, people don't talk about that fact. You know, GPUs, but GPUs take memory chips, and a lot of them. So that's MU for you. AMAT. Go chart go. There we go. Looks like we might be heading on up to the 220 area. Busted through the head and shoulders target and keep on trucking. Keep on trucking. 220, 230, possibly 300 above that. Macy's announcing they're going to close a bunch of stores. Got a market roadmap retrace and potentially breaking out. Do you know that closing a bunch of stores is bullish? I mean, most people probably wouldn't figure that, but 22, 23, 26, next upside targets there. I have like, I think 3 shares in Macy's. Yeah, 3 whole shares. GCT. Ooh. My gosh. That's a gnarly chart. That's not even sure what the SMCI, there's 190. That was that upside target we came up shy of a few weeks ago. Finally hit it. We hit it in full. Sometimes I get lucky on that one. No, there's no link to Discord. Well, there's a link to buy the market roadmap in the description down below when you click the more button. You buy the market roadmap and then you can get in Discord. I run Discord for those people who choose to go deeper and support me and buy a system. I mean, market roadmap is $5, so and it's not like I want a lot of your money. And it gets this orange line on the chart. But if you're like, hey, $5 is too much for me. That's cool. I got a YouTube video from about a year ago where I gave you the code for the market roadmap all for free. And it's no easy button, but I gave you the code if you know how to put the code into Pine Editor, and you can do it yourself. If you're just like, you know, $5 is just too much for me. I don't want to do that. That's cool. But for that $5, I also give you a weekly watch list for 3 months. So, and an option for another $20 to get it for 12 more months. So you get 15 months for like $25. I don't know how I can do anything for people cheaper, but ANF, Abercrombie & Fitch, ramping on up. Probably going to go for 140, 160 above that. GitLabs. Consolidating here. And next target up, probably somewhere up here where these. Sometimes it's that simple. Just next level, next level. We may have some resistance right here too, where these 2 highs and lows. Oh, that's where we are. We get above that, probably heading up here. CEG, ridiculous pop. Watch out for that one to give it up. 180 maybe. I wouldn't expect much more than that right now, but hey, crazy can keep being crazier. Maybe 230, 180, 230. ENPH working really hard to try to break out. That's lower highs. If we break down, coming down to 58. If we break out, going up to 200. That's a little bit of a coin flip from 125. So do you lose half your money or do you double your money? Coin flip. Workday coming down to the roadmap line. This is what they do once they get to the point where it's game over. Retrace. Target on this one. Right down here for support. Get below that. Could come back down in this zone. Race. Seeing some resistance. Is that was that the final move? Was that your final offer? Could be. Could extend more. 479, but eventually probably going to do this deeper retrace back down this 260, 280 area down here. RL. Ralph Lauren. Popping again. Went through a little bit of chop, but now we're popping again. Looks like 202, 218 on the upside. And probably find some resistance up there somewhere. LI. Looks like we're nearing. Oh no, we bounced off top of the range, coming back down. Roadmap line. Maybe come back to these lows. Maybe back to these lows. Chopping in the box is what LI likes to do. You can see we haven't been able to break out of it for almost 3 years now. Tesla has been unable to break above the gap down box. Probably reacting negatively to the cars on the lot news. Support there, resistance up here. We haven't been able to get up through the resistance. And we could make a lower low. Could visit this 150 area. We could. MDGO. We already did the MSTR. MDGO. Ramp it up. That's a biopharma. MedTech. Apple. Broke down below my support zone. Probably heading to this box right here. 150, 160. Possibly 165. Somewhere in this zone is where we're probably heading. How many people told you Apple is probably going down? I'll put that big line on the chart. So when we break below it, we're probably coming down here. There's your targets. Been there for a while. Had a big circle. We didn't break above. Popped up. Hit the resistance. Lower high. Lower high. Probably coming down here. KKR. Probably going to run out of steam at some point up here. That was a crazy move. Needs to come visit the roadmap line again. ALB. Popping up, finding resistance at the roadmap line. Down may be the way to go. If we can't get through that resistance there, yeah, drew a big resistance. That's heading down. Slow, the bias is down on this one. The long and the short of it are that it's going down. WHR. Ooh, man. Well, we've been consolidating in the target for a long time. We touched the lower target. And let's see. Target. Let's see. Go off that low. Back to this. That's the high. Breaking lower. New targets down. Maybe in this zone right here before we find support. Less houses getting sold. That means less appliances getting bought. I mean, you can go with the narrative if you want to. The chart is bearish. And CRH popping. One of these levels is going to be the resistance and come back down. One of these days. They don't go up forever. I'm telling you. And the ones that are doing this exponential stuff, they're not going to be the winners come another, whenever we get the pullback. There'll be a rotation. Like, these are the winners now. We'll find something else to be the winners in the future. It's the way the market rotation works. All right. Thanks, Jeff. I appreciate the nice words there. If I said anything that was beneficial, you liked, that was helpful, give me a thumbs up, give me a like on the video, and let me know in the comments and in the chat if anything I said was helpful. I'm trying to find out stuff that you guys want to know more about, things that are beneficial, helpful, insights that I've given you. The more feedback I get, the better I can make the show. And it just helps you, because we're looking out for things that are popping and dropping. We may see S&P climb on up here to the 5150, 5180 area right here. Possible. Could grind that actual S&P on up, even though the ES has already hit kind of the target zone. Be careful. We don't have to react negatively immediately. Crazy can keep being crazy. All right, don't chase the short until the short's there. So there's your target right up there on S&P. And we may go up here. Imagine that. If NVIDIA becomes the largest company in the world, we may come up here. We could come up here. 6,000. But we could break down. And the roadmap line keeps moving up. Move it up there. Gonna have to move this up here. And here's the support zone. And this prior low is a support zone. And we could go down here if we really start breaking down. All right, be careful. We're doing something crazy. All right, it's not just the new cars. We're actually adding $1 trillion of debt to the U.S. economy every 100 days right now. Every 100 days, $1 trillion. That's a debt spiral. All right, and it's starting to tick down below 100 days. That's not good. Not good. One of these days, we're gonna pay the piper. All right. Maybe not today, maybe not tomorrow, but soon, and we're gonna pay it in a big way. Could be all the way back down into the thousands on the S&P 500. Be careful out there. When this thing unwinds, it's going to unwind in a big way. So can't warn everybody enough. It's probably not today, probably not tomorrow, but one of these days, one of these years, we're going to go down, and it's not going to be just drop out straight down. It's going to be like so we'll get like years where we're positive, and then we'll decline more, and then years where we're positive and decline more. It's probably going to take a decade, maybe two, to work through that. So yeah, it's scary. It's scary. I mean, but it's on the chart. I'm just warning you. One of these resistances is going to be the ultimate. So have a good day. I'll be in Discord. Like I said, I'll be live at 11 here, less than an hour. So I'll see y'all later.